Welcome. Hello.
Hello,
How are you
welcome.
guys?
We are fine, and we started with Prague AI to check sessions and continue with our dearly professors. And is Michael
Nice.
also here?
Yeah.
Okay. So you can start. You can share your screen.
Yep, I'm trying to right now. Sure. Okay. Is it coming?
Yes, we can see your screen right now. But can you please make it full screen?
Yeah, I am.
Okay, great.
Is it okay? No?
Yeah, it's okay.
Okay. Thanks. Well, hey everyone. I hope everyone is doing well and enjoying the conference. My name is Recep, and today me and Michael are going to present our company's technologies under the title of the application of AI and machine learning on the financial markets. Our company is CCFR, and we are a startup based in Brno, from Czech Republic. So let's get started. Our phrase is basically, here's the phrase that describes our product. Like our AI is beating S&P 500 by 83% while having 3 times lower drawdown at the same time. S&P 500 here is the biggest 500 US companies. And analytical platform is basically an investment platform with a mission to help its users invest better, simpler, and more affordable. To achieve this, we develop investing strategies with predictable returns and risks. We use machine learning, data analysis, and artificial intelligence to evaluate stocks and then created investing strategies based on those factors. To examine the performance of our strategies, we tested them on historical data and starting from 2020 on live trading accounts. Our users choose an investment strategy that corresponds to their investment goals and apply it to their brokerage account with the help of our web application. Our company is co-funded by the European Union, and currently we are cooperating with 2 of the biggest public universities in Czech Republic, which is Mendel University and Masaryk University. Here are our fundamental founders, Michael and Vladimir. And aside from Michael and Vladimir, we have 10 core R&D members and 9 PhDs from the universities that we are cooperating with. And since I mentioned him a lot, now it's time to pass the ball to Michael. Yep. It's yours. Sorry. Let me unmute myself. Yeah.
Hello, can you hear me?
Sorry. Yes, now it's okay.
Now it should be better. Hello.
Hello, we can hear you right now.
My name is Michal. And we'll continue now. The basic assumptions are built on the 3 fundamental problems of financial engineering, and basically it's asset pricing, portfolio optimization, and risk management. Generally, machine learning brings new insights to the business and those traditional problems as well. Technically, the insight is gained by information extraction from data, and we can imagine such information as a scoring or rating, sentiment analysis, or probabilistic scenarios. Now, let me introduce this idea more specifically with example of long and short equity portfolio construction, which is basically a common strategy used by hedge funds. So imagine 100 corporations, and the goal is to select top 20 companies and 20 the worst, so that one can collect markets neutral portfolio. The key to successfully fulfill the objective is to rank the whole stock universe correctly, which means our 100 companies in our case. So the first thing one should consider is that we do not need an actual prediction, and rather our task is to relatively evaluate the market position and market potential for exposed stock. Since that, we introduce something called cross-sectional normalization, which is pretty the same as regular normalization, but it is performed over the whole stock universe at the specific step or timestamp. Since that, all our features show us the relative assessment of the company. Well, the next steps are really straightforward. First, we need to design a machine learning model to filter out important data or features more specifically. And after that, we sort ranked stocks and divide the stocks universe to quantiles because we want to pick 20 top and 20 at the bottom. Well, so far so good. We have market neutral portfolio with the best 20 stocks on the long side and to the relatively worst at the short side. Moreover, we use some hands-on machine learning tool like say penalized linear regression or so to receive valuable information, and we could consider our task as done. But we can go further and introduce two more proxies to our AI design. The first one is a financial leverage, let's say equals 2 at maximum to fulfill mandatory compliance. The leverage can help you to enlarge your buying power, but on the other hand, it's also increase your risk exposure. So one wants to use leverage only then if it's pretty sure with the stocks ranking. The next step is a variable which parameterize our overall market exposition. Despite the fact we talked about market neutral portfolio, the neutrality is rather hard assumption. Let's imagine situation on the strong market conditions like a growing market. And I believe each portfolio manager like to exploit the market drift and let the portfolio grow because of good macroeconomic conditions. So to enable such features into our machine learning model, we can redesign our problem to the framework of deep reinforcement learning, which is very close to automatic control problem, well established in industry. Then the problem statement for agent or robot is following. First, label each company, whether it's good to buy or to sell or do nothing. Then tune the ratio of both asset value over sold asset value. And finally, set up financial leverage by the level of agent's confidence about the estimations with regards to constraints, of course. Now, the AI agent is designed and referencing to the problem statement solves all the financial engineering problems at one step. Because labeling tasks belong to domain of asset valuation, while tuning market exposition ratio is portfolio optimization because amount of assets on long and short sides determine stock weights in portfolio. And last but not least, financial leverage combined with overall market exposition is a part of risk management domain. So that is all from me for now. And let me say thank to Brno AI, our cooperative, which enables us to attend interesting events like this one and helps us with mentoring and product design. So thank you, and please, Michael, to continue.
Oh, hello again. Is everything okay? Can you see my screen?
Yes, everything is okay.
Okay, thanks. So since we learned the technology behind our model, let's look at the benefits of using those technologies. You can see the performances here. Orange represents the benchmark S&P 500. Yellow one represents the top most overvalued stocks identified by our model. And two other lines are our strategies. You can see the comparison here with the index and various hedge funds. Those are one of the most famous ones like UBS, Vanguard, Schwab, and SPDR stands for SPY, which is index for S&P 500. And at the last two, it's analytical platforms, one, which is a hedged strategy, and the second, which is aggressive strategy. And again, you can see the comparison here with the index and the various hedge funds. And also in this table, we have the results of various hedge funds, indexes, and the bonds, which is considered as one of the safest investments. As you can see, the results of our model is basically overperforming all of those investment instruments concerning both average yields and drawdowns. I mean, as you can see here, yearly performance and maximum drawdown. The only product that we couldn't beat basically is TIPS, which stands for Inflationary Protected Treasury Bills in the United States. They have a drawdown of 16%. Our hedge strategy has 17%, but even this is quite impressive, because one of them is bonds, and they earn like basically minus 0.3% as demonstrated, but at the same, but we are at the same time earning a lot more. And some skeptical investors generally argue against backtests. So here is our live trading account results compared to the benchmark S&P 500. This year, 2022, was a really huge bear market for US stocks because of tapering, war in Ukraine, etc. And it confused a lot the markets. But our strategy basically overperformed S&P 500 benchmark again. And concerning fees, we don't have any type of performance or management fees or something like that. Since we are basically an AI software company, we provide our services by subscription. And as you can see in the graph, subscription is much more convenient and relatively more affordable after a certain amount. In here, it's identified as, I guess 50K. Yes, sorry, for my eyes are not that good. And basically, and last, our goals about like long-term goals. Expansion in Turkey, like Turkey has a few robo-advisors, few hedge funds, and literally no AI-based investment advisory services. So I proposed this idea to our CEO, and we are currently researching about it. Turkey has a lot of solid financial institutions that offer asset management services, and also BAS, which is individual pension schemes. And according to the research we conducted, we provide much higher returns than their returns. In Turkish liras or in dollars, they generally offer their products in Turkish lira. So it's also relatively still better than, our model is better than them. And we would like to prefer B2B approach in Turkey because promoting our services as B2C in Turkey seems not feasible because it's not really popular to invest in foreign stock market in Turkey. Our biggest somehow main goal right now, that the goal we are working on, is expansion in the United States by cooperating B2B partners, B2B companies, and financial planners, like certified for financial planner certificate holders. So since the US is the biggest, has the biggest stock exchanges in the world, and they don't have any fees on IBKR or in Robinhood or like those type of brokers, we think that it is the best market for our company. And also concerning our B2C clients, we are, it's more of a later goal, but we are planning to create an ETF to make it incredibly easy to invest with our model portfolio. And the last one, and which is the most important for us, is getting the security license in the European Union. Thank you so much for listening to me and my colleague. We would like to say thanks to Turkey AI for organizing this event and Brno AI team for letting us know. And we also would like to thank Czech AI team for helping us concerning the preparation, and Czech Embassy in Ankara, especially Mr. Pavel Danek. I wish everyone a good rest of the day, and please don't forget to check out our online booth.
Yeah, thank you, Recep. Thank you, Mishat. And yeah, it is important to underline it. You have a virtual booth area, and people who has any questions can reach out to you from there. And there is also a Czech Embassy booth. So if there are any other questions related to the Czech sessions, you can also reach out from these booths.